Well, how's it going, everyone? My name is Amos, and today I'm going to try to answer the question, why do some investors like the index fund VT? Let's go ahead and explore whether or not it's a good investment option. But before we do, I wanted to tell you, my goodness gracious. 2 weeks ago, I posted a video titled, Dividend Stocks I Am Buying Right Now. And I mentioned how I'm buying up Starbucks, and I'm not going to lie to you. Over the 14 days or so when that video was posted, my investment into Starbucks just kept dropping, right? And it felt terrible. When you buy something and it just keeps dropping, it's not a nice feeling. However, today, Starbucks has announced that they have replaced their CEO with the current Chipotle CEO named Brian Niccol. I am so excited. I am so happy. This is the catalyst we all needed because if we're going to be honest, the current CEO for Starbucks, Laxman Narasimhan, terrible. He had no vision for the company, and he was just happy with his compensation. He had no game plan to change the direction of Starbucks because it was just declining in all metrics. But despite the incompetency of the CEO, I knew that Starbucks was a brand just not disappear into the good night because caffeinated water is just really addicting. And I'm not trying to say that a CEO has the power to just miraculously change everything about Starbucks. But if you look at this graph that you see on the bottom right of your screen, when Brian Niccol took over as the CEO for Chipotle, they had just gone through a few controversies and some setbacks, including the food poisoning incident. And once he took over, look at the growth of Chipotle. His vision, his game plan, his direction and leadership has allowed Chipotle to grow as it has for the past, 5 years or so? And on that note, look at Starbucks' performance since 2019. It has just been remaining flat for the most part. And I think that's because Starbucks made a fatal mistake of bringing in a new CEO, Laxman Narasimhan, who had the exact same thing happen to him to his previous company where he was the CEO of RB. They also had to let him go after a couple of years due to his poor performance. So I don't know why Starbucks thought it would be a good idea to bring in that guy who was not good enough for RB, which is a CPG company based in the UK. But as for me, I still invested into Starbucks with, I think my average share price is around $75, $76 a share because of the brand, because of the grip that it has on middle-class Americans, and the status symbol that it provides all around the world. When you're walking around with a coffee cup with the brand and logo of the Starbucks mermaid, or whatever this thing is, it says something about you, that you like the finer things in life. So if you are a Chinese professional in corporate, you're going to want a cup of coffee from Starbucks. Likewise in Germany. And besides the intangibles, their finances and cash flow looked phenomenal. So I knew that they were just going through a tiny setback once Howard Schultz left the company, but I knew that eventually things were going to go back to normal and Starbucks trading at a premium just like Chipotle. And today, my goodness, that has happened. Once this news was announced, Starbucks share price went up by 25%, and I'm finally in the green with my investment into Starbucks. And no, I am not selling out of it yet. So with that said, let's go ahead and jump into the video. So what is VT? Well, it stands for the Vanguard Total World Stock Index Fund. Essentially, when you buy into one share of VT, you're basically buying into the entire international and domestic stock market. And the reason why VT is appealing to a lot of investors, especially boggleheads, is because it's diversified beyond belief. Not only are you buying into the small cap companies, you're also buying into the giant companies like Apple, Microsoft, and Tesla. And not only that, you have all of your bases covered. You're investing into Nigeria the same way that you're investing into Canada. So VT is just a foolproof way to just invest overall into the stock market. Not saying that it's a good or a bad thing, but that's the investing thesis behind it. And to get into the specifics, VT includes more than 9,000 stocks from companies all over the world. Roughly 15% from Europe, 10% from Asia, 65% from North America. And on that note, check this out. About 63% of the portfolio for VT are US-based companies. And then another 5.8% are Japanese. And the list goes down and on and on. So VT through one share is an opportunity for an investor to actually invest into every country's top companies. So it's not a bad deal. And then when we look at the numbers behind VT, their current dividend yield is sitting at 1.9%. Funny enough, their annual dividend payout for each share that you own is $1.90 a share. I think that's a funny coincidence right here. And it's currently trading for about $112 a share. So for roughly $100, you get to invest into every company around the world. And for the past 15 years, the total return has been roughly 297%. It's pretty solid. And when we break that down year over year, for 15 years, your money would have grown at a rate of 9.8% year over year. And at 10 years, it would have been 8.7%. And when we look at the dividends, I'm not exactly the biggest fan, but it is growing and going towards the right direction. Meaning in 2014, every quarter or 3 months, your dividend payout would have been 33 cents a share. And as of recently in this year, now you get 58 cents in dividends every 3 months. So it is growing, but it's not the biggest. And circling back to the 10-year CAGR of 8.7%, that's because the pandemic had huge consequences for the global markets all over the world. However, when we look at the total return for the past 10 years, I think it's still a good picture, 129%. For your money to have grown 130% in 10 years, that's a good deal. That's not bad at all. And then when we look at the top 20 holdings for VT, it looks very similar to VTI. About 4% of the portfolio is allocated towards Microsoft, 3.6% to Apple, Nvidia, Amazon, Facebook, Google. These are pretty much all American companies until we go to TSM, which is the chip manufacturer based out of Taipei, Taiwan. And when you look at the top 20 holdings for VTI, it pretty much looks exactly the same. But the bigger question is, how do they perform against each other? VT versus VTI. When we throw in stocks and companies from Japan, UK, China, and India into the mix, will they and can it beat the USA? Because VTI is only US-based companies, whereas VT includes every single country around the world. Well, when we look at the data and finances for the past 10 years, investing $10,000 in January of 2015 and reinvesting those dividends back into the portfolio to buy more shares, the results don't surprise me. For VT, your $10,000 would have grown to $23,000. The year-over-year CAGR would have been 9.3%. Pretty respectable, pretty good, until you look at VTI. That same $10,000 would have grown to a full $30,000, meaning your money would have grown by 12.2% year over year. So based on pure numbers alone, VT underperforms VTI. And when we look at the graph breakdown of VT versus VTI, it looks like they were pretty much the same performance up until about the pandemic. That's when the US economy and US companies just skyrocketed, and VT has been trailing. If we look at the data right here, so global internationally during the worst year, it went down by negative 18%, whereas in the US, it went down by negative 19.5%. So based on this alone, also looking at the best year comparisons, it looks like the US stock market is a little bit more volatile than VT, but it does not necessarily mean that it's a bad thing, because as you can see, the gains are a lot more and in your favor with VTI. And if we look at just this year alone, for VTI, the total gains has been 13% from January to August. Likewise, when we look at VT, the entire stock market around the world, well, the growth has only been 10.5%. And I say only as if it's a bad thing. That's actually really good performance. And call it the American arrogance, but I think VTI provides enough diversification and exposure to companies that are operating overseas in all of the major markets. Not only that, the companies that are based in the US and the startups that are born in the US every single year, they tend to be global hits, meaning they don't just cater towards the American audience. And that's why if you feel like through my voice and through what I'm saying, I sound biased, I just don't feel the need to invest into Africa, the Middle East, and whatnot. I just don't. And before I hurt feelings, I think VT is valid as an investment. To get 10.5% performance in the span of 8 months, phenomenal. And it covers all of your bases, like I said earlier. Not only are you investing into China, England, Germany, and Japan, but you're also investing into the US. So it has merit and credibility. It's a good investment option. But with that said, how would I rank the index funds according to my own personal judgment and evaluation? Because I care a lot about the dividend yield and total returns. And I give bonus points if the investment portfolio is highly concentrated in American companies. Number 1 would be VOO. Number 2 would be VTI. Number 3 would be SCHD, not necessarily for the total returns, but to preserve your capital and to have a solid dividend yield in the ballpark of 3.5%. By the way, talking about SCHD, during their worst year in the past 10 or 15 years or so, it only went down by -5%. So how I see SCHD is the same way I look at bonds, but a superior performance. Because not only does the share price appreciate better than bonds, but it also has a dividend yield that's competitive with bonds. And then number 4 would be VT, meaning I still think very highly of it. Just because VT is in 4th place, it does not mean that it's bad. It just means that it's last place against some really good index funds. If VT were up against some other popular ETFs, it could potentially be in 1st place as long as VOO, VTI, and SCHD are not in the picture. I've made videos about each one of these and I go into detail about my reasoning and logic. And if you follow this channel for a while, then you know how bullish I am on the S&P 500 and the American economy. But to refresh your memory, I see the US as like 50 countries banded together forming up as one super team. Like think about all of Europe banding together. That's how I see the US. And maybe I have a biased and patriotic perspective as someone that worked at American companies in corporate. But my question to you is, am I wrong? When we think about the biggest, most influential companies around the world, I guarantee you in the top 100 or even top 20 or top 10, almost all of them will be American based. Likewise, I'm willing to risk it and just stay invested into American companies. I really don't feel any compelling reason for me to diversify specifically to Africa or South America. I really don't. So for me, VT does not make sense to be in my portfolio since I'm so bullish on America. Now, granted, I don't want to come off too arrogant and ignorant because I fully know, and you're right, my opinion would be different if I was raised overseas and saw the potential of another country becoming more relevant and influential than the US. But that's not the case now, is it, Robert? I'm an American that was born in America, raised in America, and I've seen and experienced the American capitalism system and why serial entrepreneurs and why the brightest and best potential business people and students from all around the world want to come to the US. Yes, call me ignorant, call me arrogant, it's just what I have seen. And as far as I can tell, this trend of the best and brightest wanting to move and create their business in America, I don't think it's going to change. And I'm not even an Olympics kind of guy, but we dominated that as well, hence why I put up the medal count as the visual for this slide. Though if I'm going to be honest, if you look at 2nd place, China, I think the Chinese market has a ton of potential, but their government gets in the way for me to invest into any Chinese company. And that's why I just steer clear of any Chinese company. Knowing full well that they might be undervalued, I just can't risk it with that market. Which brings us to the conclusion. Don't just pass on by like a fart in the wind. If you enjoyed this video, do me a solid and tap on the like button because my analytics show that 77% of you are not subscribed, but you come back to this channel and watch the content, but you never click like or subscribe. So my feelings are hurt as a 30-something-year-old. And I know I said a lot, and it almost comes off as if VT is a worthless investment option, but that couldn't be further from the truth. I still think that VT is a perfectly good choice for someone who knows investing is important but does not want to do too much research. I think it's ideal for the people who want to see modest growth in their portfolio while not neglecting diversification. In my personal opinion, I think VTI provides enough diversification, but VT just takes it to the next level by diversifying into emerging markets, to Europe, to Asia, to Africa. And based on the data that we just saw, VT and the world stock markets have seen a pretty solid return. It's not inferior to VTI. It's just that I'm really bullish on the American economy, and that's why I would rather just put my money into VOO and VTI and just not bother with VT. And I know it's been a while since I uploaded onto this channel. It's because I've been busy. I've been consolidating and rebranding my different YouTube channels, and now I'm finally just gonna focus on two, this one and my other one, and giving all of my time and energy between just two YouTube channels instead of four. So hopefully this means my creativity and output can be increased, because now we're just talking about two YouTube channels. But anyways, you don't care about that. So with that said, I'll talk to you next time. Stay safe. I love you.